The Insights Idaho Department of Finance communicates department news and perspectives to aid consumers in making educated financial decisions and to inform both industry and consumers of regulatory and consumer protection issues.
Hello, welcome to the 9th episode of Insights by the Idaho Department of Finance. I am Celia Kenny, Consumer Affairs Program Coordinator, joined by Kelly Davis, Program Specialist. Today we will talk about a local hot topic, navigating the barriers of first-time homebuying.
To share their perspectives on this topic, we are excited to be joined by Consumer Finance Bureau Chief Erin van Engelen and one current and one past member of the Idaho Mortgage Advisory Board, Michelle Guth and Tyler Porter. As a prospective first-time homebuyer myself, I am looking forward to learning more about this topic and appreciate your willingness to join this conversation. With that, I will transition to you, Erin.
Thank you, Kelly. I'm excited to have everyone here today. I'd like to give a little background of information for our listeners on the Mortgage Advisory Board. They are a group of mortgage industry professionals representing the Idaho Mortgage Lenders Association. The board is framed by the Idaho Residential Mortgage Practices Act to create a space that fosters communication between the department and industry surrounding the mortgage markets in our state. We meet twice a year, and I always enjoy the information presented. So I'm really looking forward to hearing what advice our guests have for us today. So welcome, Michelle and Ty.
Thanks.
I wanted to start by getting to know your guys' backgrounds a little bit better. Would each of you mind sharing a little bit about yourself, how you found yourself in the mortgage industry, how long you've been in the mortgage industry? So Ty, let's start with you.
Well, I was actually framing houses in Boise. Just graduated from College of Idaho with a psychology and biology degree. And my sister-in-law had started a mortgage company. She said, "Hey, Ty, you want to learn mortgages?" And I said, "No," but I did anyway. And there's really no training or anything at that point. And you just kind of start in the business. And that was in 96. So been doing mortgages for it'll be 28 years in April.
I mean, that's a long time. Are you a little sad that you're not still in construction? Because that's going really well right now.
I do actually still love construction. And, I'm the guy that stops and likes to go walk around and look at a house still.
Excellent. And Michelle, what brought you to the mortgage industry?
Well, I actually started my career in finance. So as soon as I got out of school, I had an opportunity to work for a large financial bank. And during that time, I started working in the home loan department and became very passionate about doing home loans. I ended up working into a VP management position for a large institution for 13 years. And at that point in time, decided I wanted to go out on my own and was fortunate enough to open up my company in 2004, Diversified Mortgage Group. And I've been in the business so long that I started by typing up deeds of trust and loan documents with a typewriter and black carbon paper. So that'll give you an idea how long I've been doing this, but it's been a wonderful ride and just celebrated my 32-year anniversary.
Well, congratulations on both of you. We have a lot of history here, and I'm excited to get into it. So we have our regular conversations about markets in Idaho, but the environment is always changing. So can you tell us kind of about the home buying environment in Idaho and its unique challenges right now? Specifically, what are some of the barriers for consumers or first-time homeowners? And then later we'll follow up a little bit with some of the questions on how to overcome those barriers.
Great question. As we all know, quite often buying a home is one of the best ways to build long-term wealth, but there are some challenges that we're facing. One of those being the lack of inventory in the U.S., and Idaho is definitely experiencing that as well. We are seeing that many current homeowners are electing not to downsize or upsize because when they got their last mortgage, it was during the historically low interest rates, and they were very fortunate to get well below what we're seeing currently in the market. So as a result, we are experiencing those inventory shortages. Thankfully, many builders are offering some incentives, so a lot of the homes that we're seeing go under contract are new construction, and those same builders are offering some great incentives. Ty, are you seeing anything with some incentives for the builders currently?
For sure. That's the one thing that we've seen a big change in the last couple of years is with this low inventory and higher interest rates, it's really the challenge is affordability. And so with the builders being able to basically build in these incentives for first-time home buyers, they're buying down that interest rate to make it a more affordable financing and get people into homes because it's really hard right now.
Yeah, I mean, I was just actually listening to Marketplace last week, and they were talking about the boomer generation staying put in their homes and not moving. And Michelle, you kind of touched on that a little bit, where they're locked into a rate or they've paid off their mortgage and they're just not moving. So inventory is not coming from houses where people are moving. It's coming from new construction. And you guys both talk about builders offering incentives or rate buy downs. Are there any pitfalls that consumers should be aware about when they're looking at those buy downs?
I wouldn't say necessarily pitfalls, but again, it's advantageous to talk to a seasoned mortgage officer because a lot of builders are advertising temporary buy downs, and there is a big difference on long-term financial gain when you're looking at a temporary buy down versus a permanent buy down. And there's a lot of misconceptions on what those two things are. So in doing so, with the temporary buy down, basically you're prepaying the difference on a payment for the first 2 to 3 years. Whereas with a permanent buy down, it's going to get you the lower rate for the life of the loan. And where that makes the most sense will be contingent upon how long you think you're going to be in that home and have that mortgage. So having a very detailed conversation with your loan officer on what your long-term plans are or specific to that home is going to help them give you the best advice on how to maximize on some of those builder incentives.
And to piggyback on that, so the temporary buy downs, as a borrower, you still have to qualify for the your end interest rate, whereas on the permanent buy down, you're qualifying on that lower interest rate because it's that rate for the life of the loan. So that can cause issues too. But the other thing that people need to be aware of on the builder incentives is depending on what the homeowner is able to put down, there are limits as to what that incentive can be.
So it's important to look at not only the contract that you're doing for your mortgage, but also any kind of contract that you're signing with a real estate agent or, Real Estate Settlement Procedures Act, the REPSA form, to see what contingencies are in there as well, right?
Absolutely. And I think having your agent and your lender be part of the process and talking about what they're looking at offering, how they're looking at structuring it, it's going to definitely help to make sure we're maximizing what they have available to them and that we don't exceed it or possibly there's room for additional incentives.
Yeah, the market is tough enough now that you almost have to manufacture deals where if you have somebody that can only get pre-qualified to $350,000, but there's a $380,000 home that an agent has that's listed, you may need to call that agent and say, hey, is there any room for that seller to do $15,000 in a rate buy down? And then you might be able to get your borrower that's only approved for $350,000 into that $380,000 home.
I was fortunate enough when I decided to buy my first home that I was already working for the Idaho Department of Finance. So I had a really good cadre of people around me to help provide advice on how to get into it. But what are the initial steps a consumer can take if they're looking to buy their first home? How much should a first-time homeowner expect to have to save for a down payment? I know that's changed significantly over the years since I bought my house. So what would a first-time homeowner be looking at, and what are the initial steps they should take?
Well, I think first and foremost, they should meet with a mortgage professional before even meeting with a real estate agent because it's going to be important to determine what is their desired maximum payment. That's going to allow us to work the numbers backwards so we know what price point they want to be looking at. Worst thing to do would be go out, see an open house, fall in love with the house, and then find out it's maybe not within your comfort level or you may not have the ability to qualify for that much house. And we want to make sure we have a clear understanding of what their goals are. How much have they had an opportunity to set aside to put towards the transaction? Are there some areas of credit that we can help give them some advice on to possibly get an increased credit score? With a mortgage, quite often, the interest rate, the mortgage insurance is all going to be based off of a credit score, or the middle score of the lower of the two borrowers that are on the application. So we want to do everything we can to put them in the best possible position to try to keep that rate down and help them get that payment within their desired budget. And then during that meeting, they're also going to talk about, what's that roadmap look like? How much are you able to save within the time frame for which you're wanting to buy? And then we're going to talk about some down payments, which Ty can touch on some more. But there's such a misconception out there that they still need a large down payment, and that's definitely not the case.
Yeah, there's still a ton of options for down payment assistance. And, we're lucky in Idaho, to be honest, to have the Idaho Housing, which has some amazing programs that help people with their down payment. And you can still basically get into a house for 0.5% of whatever that purchase price is. And then there are programs, VA programs or USDA, where you can still able to do 100% financing.
I have to do this because as a government worker, we use acronyms all the time. And a lot of times our consumers don't understand. So if we're going to use any acronyms like USDA, I assume you're talking about
And VA.
and VA, so Veterans Administration, USDA is
U.S. Department of Agriculture.
yes. Okay. Just want to make sure we get that out there for our audience because we use a lot of alphabet soup, as I like to say. So, you touched on some of those programs. I think, we also talked about kind of down payment assistance. If I'm a first-time homeowner, we talked about the options that you have for loans. What documentation should I be prepared to bring if I'm going to meet with a lender, or broker, or a loan officer?
I like to start with 2 months bank statements, W-2s, pay stubs. You're really, as far as tax returns go, you're typically getting either just 2 years of W-2s, or if self-employed borrowers, you need 2 full years of tax returns, and then essentially 2 months of any assets they have, whether that's checking, savings, and then retirement. Am I forgetting anything?
Nope, I think you touched on most of it. I think the big thing, too, is if there's any other expenditures that you have, items such as spousal support, child support, make sure you mention that to your loan officer as well. We do have to factor in those expenses into their ability to qualify. So be very forthcoming to make sure that we don't miss anything up front, to make sure we're validating accurate information.
Okay. Michelle, you mentioned earlier, don't just go to an open house and fall in love with a house and then go try and find financing for that. Can you talk about a little bit of that? You had some comments earlier, or in my notes, that talk about the standards or the condition of the home. What does that mean for a first-time homeowner?
Well, quite often we're seeing that they are wanting to get a fixer-upper, which is great. It's a good way to get in the market. Maybe it'll help at that desired price range, because there's a lot of competition for our first-time home buyers for those prices that are under $400,000. So getting a fixer-upper is a great thing. However, it still has to meet minimum standards. So quite often we'll see a home that is a bit beyond being a fixer-upper per se. What we consider cosmetic in nature are things like, maybe it still has that fabulous marigold or avocado appliances from the 1970s, and they want to update that. Old paint, old carpet. Cosmetic is fine, but when we start looking at the structural integrity of the home, that's where it can become a problem. So if the roof is in disrepair, that's going to be a problem for all loan programs. Quite often, people think that if they're getting conventional financing, the home doesn't have to be in that good a shape, but that's not necessarily the case. The biggest one for the government programs is exterior chipped peeling paint. So that's something that will have to be remediated by the seller prior to closing. Broken windows can be an issue. So again, cosmetic in nature, totally great. But if it's in really rough condition, maybe talk to your loan officer before submitting an offer and show them some pictures, or have a conversation and dialogue about what you're seeing in that house, so we can see how best to navigate it. In some cases, we can negotiate with the seller to get them to do those repairs. But we want to address that before they go under contract, ideally, to make sure it's going to meet the program we have them approved for.
This is just, it's a lot to think about. We have documentation, we have financing, we have the condition of the home, we have how much can we afford. So if I'm looking for a mortgage broker, lender, or loan originator to suit my needs, Ty, how do I go about that?
That's a great question, because in my mind, we all do the exact same thing. We all get our rates from the same places, but you really want to make sure they're licensed. You want to make sure they know the market in your area, and, really somebody that you're comfortable with. And I always say it's a sixth sense, that gut feeling. And honestly, I think it's the same thing in who you decide to use, because the rate and fees are going to vary. My guess would be between $300 and $800 between everybody you go to. But at the end of the day, you want to find somebody you're comfortable with and that's talking to you about your full financial picture and making the right decisions for you.
And that's the same with anything dealing with our finances, right? We want to make sure that we have that right fit with the person.
And if I could touch on that too, one thing to consider, Ty, earlier you mentioned the Idaho Housing and Finance Program. which is tremendous. Even if you're doing VA, Veterans Administration Loan, with 100% financing, regardless of the program you get, they offer some down payment assistance options. So if we can't get the seller to contribute to help cover our closing costs, you have the ability of getting a second mortgage to cover those expenses. So we can piggyback that with pretty much any program. The benefit of working with a local lender is most local lenders have access to some of these down payment assistance programs, specifically through Idaho Housing and Finance. And when you're working with an online lender, quite often it's not a program they have access to. And as Ty mentioned, they don't necessarily have a good pulse on what's happening in our market. What do our property taxes look like, based on areas of interest? And that varies dramatically from one county to the next, and or even what part of a specific city for which you're buying in, which can really impact your payment. So working with a local lender, they know that, and they're going to give you more accurate numbers when trying to help you determine that budget and ensure that your qualification is in fact accurate for what you're trying to qualify for.
The other thing that just reminded me of, Michelle, is that in Idaho, we have the homeowner's exemption, which a lot of states don't have. And it's a huge benefit to homeowners to where if you own and occupy your property, say you buy a house for $200,000, instead of paying property taxes on $200,000, you only pay property taxes on $100,000. And a lot of other states don't have that benefit that Idaho gives to their homeowners. And if you're working with an online lender, they may not know that about the taxes in Idaho.
Yeah. Another thing to add to the list of things to consider, property taxes.
Right.
So I will say, as the department representative here, I'm glad that you mentioned finding a licensed company or mortgage loan originator, because with the exception of some entities that are exempt by the Idaho Residential Mortgage Practices Act, all brokers, lenders, and loan originators are required to have a license with the department. So I would encourage, if a consumer is researching a broker, lender, or loan originator, they should consult with the department's website or staff to determine if a license has been obtained. Happy to say both people in this room have the proper licensure. Thank you. So do you guys have any other thoughts on the key factors of finding the right loan or mortgage professional to work with? I mean, you guys have touched on some great points, but did you think of anything else?
Well, I think Ty definitely hit it earlier when he said it's that sense, that gut feeling. I'm surprised when I have had clients come in that have already gone through the pre-approval process with another lender, and I will ask them, well, how much did you approve for, and what loan program are you looking at? And they really don't have any idea. And I know, having known Ty for many years, we have a similar approach that when our clients leave our office, we want them to feel very well informed and have a very clear understanding of the program, the terms of the approval, and how we're structuring it to make sure we're setting them up for success. So when you are shopping, as Ty mentioned, it's not necessarily about what rate are they quoting, what fee are they quoting. There's so much volatility in the market with respect to rates. So they could get a quote on Monday, and come Wednesday, that same lender's quote could look significantly different. So if you're quoting from one lender on Monday to another lender on Wednesday, you're not really comparing apples to apples. So you really should get quotes on the same day, first and foremost. But it still comes back to somebody who's well-versed in your market, understands programs, are listening to what's important to you, not just product dumping and saying this is what you're going to do and this is why you're going to do it. They should be asking questions on what's important to you. Again, how long are you going to be in this house? There should be a very in-depth dialogue and rapport build, because both of us pride ourselves in saying we're going to be that lender for life. We want to help them with their next house, their children's houses, and so forth. So we want to continue to be a resource to them long after their loan closes. It's not a one and done. This is not a transactional based system for us. We definitely want to build that long-term relationship. So if you're not getting that feeling from the person you're talking to, definitely probably should go talk to another lender.
Yeah, that's great.
Yeah, and I when we talk to consumers, I think one of the most important things is that people, when they go in to talk to a professional, don't think that they have space to ask questions if they don't understand, or they need clarification on a point. And we always encourage consumers, if you don't fully understand the program that they're offering you, ask questions. I'm sure both of you probably encourage people to do that.
Yeah, one of the things I always find myself saying, like the last thing before first-time homebuyer leaves the office, is remember, there are no dumb questions. I do this all the time, and sometimes I forget to cover something. So if you have anything that you're thinking, email me or shoot me a text, and I'm happy to answer that. So I want you to be comfortable and know that you're making the right decisions.
100% is such an overwhelming process, and we do give a ton of information. So it's expected that they're going to forget something or need clarification on something. So if we have to go over it 10 times, we're happy to do that. We want to make sure they feel very well informed.
And you make a good point there. This is not just the one and done. So if anything that you haven't covered so far that potentially like, all right, I found my lender, I found my broker, I found the person I've got that gut feeling with, and I'm like really good and solid with appreciating their services and wanting to work with them. What can I expect next?
Like the next step in the process, or?
Well, once they're pre-qualified, I think the other thing, and actually if I can digress a little bit, let's also, if we can, Erin, talk about pre-qualified versus fully credit qualified, because that again is a misconception. We'll have consumers say, oh, I'm already pre-qualified. It's like, oh, great. Did you send all your income, your assets? Well, no, they haven't asked for that, but they pulled my credit and they said I'm good to start shopping. Well, until the lender has validated everything, there's a big difference from being pre-approved to fully credit approved. So you want to make sure that you have furnished all documentation, make sure you are actually qualified for what they're telling you can shop for.
That's a very good point.
Yes.
Yeah. And then in doing so, it's finding a lender that's going to be available to you. If you're out shopping evenings, weekends, we want to make sure that we can answer those questions for you because, again, when you identify a home of interest, we want to double check where's the rate of that day? What are the taxes specific to that property so that we can give them an approximate payment to make sure it falls within their comfort level? Because again, it changes from one property to the next. So in doing so, though, Ty, maybe you can touch on once they go under contract what that looks like.
Yeah, I was going to mention that earlier on. As a first-time home buyer, I think one of the things people are often surprised at is the inspection. Once they do and find a property, they need to be able to have money set aside, $400 to $500, to do an inspection of that property, which does the deep dive, 4 or 5 hours somebody spends in that house to see if there's anything structurally wrong with that property to make sure that they do want to move forward on it. And I find that that's an expense that most people aren't aware of when they first come in. They just think of an inspection and an appraisal kind of as the same thing. And it's definitely not the same thing. The appraisal is for the lender to verify the property is worth what it is. The inspection is for you, the borrower, to make sure that there's nothing that's going to bite you later by purchasing this property.
Yeah, and I think that goes back to when we were talking about the condition of the home. The inspection might find something there that disqualifies you from certain programs.
Absolutely. Yep. And your realtor is going to be the one that's going to typically help you set up that home inspection. It's actually not a requirement of the lending side, but we're going to be the first ones to also encourage you to get that home inspection. Biggest investment of your life, so spending that $300 to $500 is money well spent because they're literally getting up in the crawl space, the attic. They're really checking out the bones of that property. So it's definitely money well spent.
Yeah. Well, guys, again, this is always great information. And I'm going to close up here with a question I didn't give you ahead of time. So something that we talk about in our Mortgage Advisory Board meetings is where do you think the markets are going right now in Idaho? And Ty, I'll start with you.
Well, I'm afraid just based on inventory and being behind in building since the mortgage meltdown of 07 and 08, I'm afraid that things are just going to continue to appreciate based on supply and demand. So, I mean, I hope it slows down, but my opinion would be that unfortunately affordability is probably going to get harder.
Yeah, I would agree with that. And again, even getting into a home now, I think is still a great financial decision for anybody because, again, one of the fastest ways to build long-term wealth. But with that said, we recognize there is a pretty big disparity between the median home price and the median income level. So it is challenging. But the sooner we can get them into a property to help them build that equity, I think it would be advantageous because I agree with Ty. I think the market's going to continue to see that level of appreciation. Thankfully, not what we experienced over the last 5 years. I think it's going to level out to more sustainable, typical appreciation levels year over year. But the longer you wait, I think it just makes it that much more challenging to get in a home. And the interest rates are not going to get back down, in my opinion, ever close to what we saw for the preceding, 4 or 5 years where we're seeing the high 2s, 3% APRs. It's just not going to happen. So we're back to what is a pretty typical market with respect to interest rates. The 50-year average APR is 7.7%. So when you look at the, what is typical, we're pretty close to national and historical averages. So waiting for those rates to drop, we could be waiting a long time. So it might be worth considering buying sooner than later.
Yeah, it's an old Japanese proverb. The best time to buy a house is 20 years ago and yesterday.
That's the same thing with a boat. The best day and the worst day. Well, Michelle and Ty, thank you so much for coming and having a conversation with me. I always appreciate our collaboration. It's great information as usual. So Celia and Kelly, unless you have any additional questions, I'm going to let you guys close us out.
Thank you for joining us on episode 9 of Insights. We loved having this great group on the podcast today to share their home buying wisdom with us all. This episode on housing represents the first of 4 weekly financial literacy topics we will spotlight to promote Financial Literacy Month in April. For new releases, subscribe to the IDOF Insights podcast on YouTube or your preferred podcast platform. Also, be sure to follow the Idaho Department of Finance on Facebook at Idaho DOF and Twitter at Idaho Finance for the most recent tips, resources, and important alerts about financial services and providers.
We welcome suggestions for future podcast topics that are important to our stakeholders and all Idaho consumers. Please consider forwarding suggestions and feedback to our email, finance@finance.idaho.gov. The Department of Finance reminds our listeners that we are committed to safeguarding the financial health of Idahoans through the appropriate oversight of diverse financial institutions, as well as the education and protection of consumers. For more information on financial literacy topics and/or additional information, please visit our website at www.finance.idaho.gov.
We want to thank you for joining us for our production of Insights, the Idaho Department of Finance. We'd love to hear from you and learn more about the ideas and topics that are on your mind. Forward your suggestions and feedback to our email address, finance@finance.idaho.gov.